Welcome to Concept Craft. We are presenting step-by-step videos training to crack your certification exam, so you can gain the confidence to take on any accounting challenge. Now let's begin our today's lesson. Bounce checks and insufficient funds. Learning outcomes. In this lesson, we'll cover handling failed customer payments or insufficient funds in QuickBooks Online. Topics: what to do when a payment fails. Recording bounce checks. More than just inconvenience. Clients may sometimes receive payments that bounce due to insufficient funds on the customer's side. If that happens, the client may also get charged a penalty fee by their bank. How can you and QuickBooks Online help? As a pro advisor, you can help your client resolve the failed payment and reset the invoice. You can also help them invoice the customer for any charges, including any extra fees they may wish to charge for the inconvenience, and record the failed payment correctly. Let's see how it's done. What to do when a payment fails. A common mistake that clients tend to make when encountering a bounced check is to delete the original deposit and payment. This can make working with bank feeds and reconciling accounts more challenging. Instead of this, if a payment fails, you or your client should record the deduction for the returned check in their bank account. Increase, debit, the accounts receivable, A/R, balance for the amount of the failed payment, and decrease, credit, the cash for the same amount. Record the bank fee. Invoice the customer for the bank charge, plus any handling fee. Restore aging on the original invoice, because the payment was returned. Find out how to record a failed payment next. Pro Advisor Tip. To avoid bounce checks, encourage your clients to sign up for QuickBooks payments so that their customers pay either by ACH or credit card. If the client uses QuickBooks payments and a customer's attempted ACH payment fails due to insufficient funds, QuickBooks payments attempts to rerun the transaction several more times for a week, unless you or your client void the transaction sooner. If the transaction does not process by the fourth attempt, it turns into a bounce/return check. QuickBooks Payments Non-Sufficient Funds (NSF) fee is much less than what the bank would charge. For more information about QuickBooks Payments, visit our Setting Up QuickBooks Payments lesson. Recording bounce checks. Let's look at the steps to record the failed payment. First, we need to create service items for the check itself and the charge from the bank. Select Sales. In the Products and Services list, select New and then Service. Name the new service bounce check. In the Income Account drop-down, select Checking to map it to the checking account. In the Sales Tax category, select Non-Taxable. Next, select Save and New. Name the next service item bounce check fee. Map it to the bank charges expense account to offset the fees charged by the bank. In the Sales Price/Rate box, add the fee the bank charged for the bounce check. If the fee varies, leave the Sales Price/Rate box empty. Note that if your client is charging more than the bank charges them, they may want to set up a bounce check fees income account. This is also non-taxable, so select it from the Sales Tax category drop-down. Next, select Save and Close. Now let's create an invoice for the customer that includes the amount of the bounce check and the bounce check fee. To do that, back in the Sales Center, select the Invoices tab. Select Create Invoice. Fill in the invoice as needed. In the Product/Service column, add bounce check and the amount the check was for. On the next line, add bounce check fee and the amount the bank charged. Then select Save. Now let's create a new expense transaction for the bounce check fee. Select Plus New, then Expense. Add the details as needed. For the payment date, use the date the bank charged the bounce check fee. In the Category column, select the bank charges expense account. Fill in the rest of the details. Then select Save and Close. To reset the aging on the original invoice, select the Customers tab in the Sales Center. Find the bounce payment by selecting the customer first, and then the right invoice. Deselect the invoice the payment was for, then select the new invoice for the amount of the bounce check, excluding any fee charged on the new invoice. Make sure that the amount of the payment is unchanged. Next, select Save and Close. That's it. When the customer settles the invoice, you should use Receive Payment to post the payment against the open invoice. Summing up. Learning outcomes. Well done. In this lesson, we covered Handling failed customer payments or insufficient funds in QuickBooks Online. Knowledge recap. Failed payments impact your client's bottom line and can also lead to bank charges. You can now help clients in this situation by making sure their accounts balance correctly, and by creating a clear record of what happened. Next steps. In the next lesson, we'll look at creating $0 transactions.